Look, if you're tuning in today, chances are you're more than a little curious about the stock market. You've seen the headlines, you've heard the massive success stories, and you know, deep down, it's a ridiculously powerful tool for building wealth. But let's be real, when you actually peek under the hood, the whole thing can seem, well, pretty intimidating. Take a breath, relax. Today we are laying out a complete step-by-step 2026 roadmap to stock market success. And I'm making you a promise right now. No complicated jargon, no overwhelming Wall Street math, just a super simple, straightforward guide to exactly what you need to get started. Right off the bat, you're probably asking yourself, where do I even start? Or isn't this whole investing thing incredibly complicated? Maybe you're terrified of making some massive rookie mistake and losing your shirt. And you know what? If those thoughts are bouncing around in your head, I absolutely want to validate those anxieties right now. It is completely normal to feel hesitant. The financial industry kinda has a bad habit of making things look way more complex than they actually are. But we're going to strip all of that away today and give you a crystal clear path forward. Okay, let's dive into this. To make everything super digestible, we're going to break this explainer down into 5 clear phases. 1, we'll demystify the stock market. 2, we'll talk about why knowledge has to come before capital. 3, we'll cover simple strategies and tools. 4, building that consistency habit. And finally 5, mastering your mindset and risk. Let's get to it. All right, phase 1, demystifying the stock market. We are taking it right back to basics. So what actually is the stock market? Strip away the confusing math and the guys shouting on trading floors. At its core, it's literally just a place where people buy and sell shares of companies. This means when you buy a stock, you aren't just pushing abstract numbers around on a glowing screen, right? You're not placing a bet at a casino. You are actually buying a small, tangible piece of a real functioning business. You become a part owner. And honestly, keeping that specific reality in your head is the absolute best way to stay grounded when you start investing. Now, you might be wondering, why go through the trouble? Why not just keep your money in a savings account? Well, if you just keep your money in cash, inflation is actively eating away at it. It's just sitting there, losing its purchasing power. It doesn't help your wealth grow much over time at all. But investing in stocks, that flips the entire equation. When you invest, your money suddenly clocks in and starts working for you. It grows alongside the company. You can earn regular dividends, and you get to ride the magical wave of long-term compounding. Growing your wealth over time, that is the whole shebang here. Which brings us to phase 2, knowledge before capital. Because preparation really, really matters. There is this massive myth out there. So many people think, man, I need thousands and thousands of dollars to even start investing. Actually, scratch that. It's probably the single biggest mistake beginners make. The reality, you need knowledge first, not a huge amount of money. Taking just a little bit of time to understand what you're doing before you start throwing your hard-earned cash around is exactly how you protect yourself from those early, painful losses. So what's the game plan for learning? What do you actually need to know? Good news. You don't need a fancy finance degree. You just need to wrap your head around 3 things. First, how companies basically operate and make money. Second, how markets naturally breathe. They move up and down in cycles, and that's normal. And third, the basic principles of investing. Just chew on these concepts a bit before you put a single dollar on the line. Okay, phase 3, simple strategies and tools. Once you've got the knowledge, you need the right tools for beginners. Let's talk strategy. Think about the difference between day trading and long-term investing. Day trading is what you see in the movies, staring at 6 monitors, sweating over every single market tick, trying to buy and sell every day. As a beginner, do not do that. Just ignore it entirely. The smartest, simplest approach is long-term investing. You buy quality assets, and you just sit on them for years. Let time do the heavy lifting for you. Consistency matters way more than complexity. Now, what's really interesting about this slide is how these starting assets naturally protect you. When you're fresh to the market, please don't stress yourself out trying to pick the one perfect stock that's going to go to the moon. Instead, look at index funds, ETFs, or massive, stable companies. Why? Because it's like buying a giant basket of stocks all at once. You instantly spread your risk around. You're building a rock-solid foundation rather than just rolling the dice on one company. And this brilliantly illustrates your actual physical setup. It's basically a 1-2-3 punch. Step 1, get educated. Step 2, choose those simple, diversified assets we just talked about. Step 3, open a beginner-friendly brokerage account. A brokerage is literally just your gateway. It's the app or website that connects you to the market. Link your bank account to a trusted platform, and boom, you are ready to go. Setting up the account is fun, but now we actually have to use it. Phase 4, building the consistency habit. Time for taking those first steps. I want you to basically burn this rule into your brain. Your first goal is not profit. Your first goal is experience. When you make your very first trade, do not sit there sweating, wondering if it's going to double in value by tomorrow morning. Your only objective right now is just learning the mechanics, hitting the buy button, seeing how it works. That's it.
Because we're just chasing experience right now, the absolute best thing you can do is start small. I'm talking coffee money. You do not need to drop a massive chunk of your savings right out of the gate. Put in a tiny amount just to get a feel for it. Remove all that intense pressure, get comfortable, and just get that crucial first exposure.
Over time, this small action evolves into consistency investing. It's like going to the gym. Instead of trying to magically guess when the market is at its lowest point, which, spoiler alert, no one can do, you just invest a little bit regularly. Set aside a specific amount every single month, rain or shine. Doing this builds serious discipline, it completely removes the emotion from your choices, and it grows your wealth steadily. This right here, this is the secret sauce for real progress. Which perfectly sets up Phase 5, mastering mindset and risk. To truly win at this, you've got to master your own psychology. Look, the stock market throws a tantrum every other day. It goes up, it goes down, the news is screaming about a crash or a boom. It is incredibly distracting. So the crucial point is, you have to think in years, not days. Wealth is built slowly. If you zoom out and look at the big picture, the daily chaos doesn't matter. Train yourself to just tune out the noise. But part of playing the long game is making sure you don't get wiped out. We have to talk risk management, which so many beginners completely ignore. No investment is a sure thing, right? So follow the golden rules. Never, ever put all your money in one single place. Diversify. Spread your risk across different types of investments. If the tech industry takes a weird nosedive, you don't want your entire life savings going down with the ship. Now, managing risk on paper is easy, but managing the feelings? Oof, that's the real challenge. The market is basically a trap for two massive emotions. When things are going up and everyone's making money, it is so easy to get greedy and take foolish risks. On the flip side, when the market drops, the immediate instinct is to panic and sell everything. You have to fight both of those urges like your financial life depends on it, because it kind of does. Let's be real. Emotional decisions almost always lead to incredibly expensive mistakes. When the market gets wild, your only job is to stay completely calm and stick to your consistent long-term plan. Let logic drive the car, not fear, and definitely not greed. All right, let's wrap this all up into a nice, neat package for you. Here is your ultimate 2026 checklist. Understand the basics. Learn before you leap. Stick to simple stuff like index funds. Open that brokerage account. Invest a tiny amount just to start. Stay consistent month after month. Always, always think long-term. Spread your risk around. Keep those emotions in check. And hey, just keep learning. It's a lifelong journey and you're only going to get sharper. I really want to leave you with this final, powerful thought from our source material today. You absolutely do not need to be an expert to start. You just need a little patience, some discipline, and the guts to actually do it. Because honestly, the biggest mistake beginners make is waiting too long. Every single day you sit on the sidelines is a day of compounding interest that you are missing out on. So, I've got to ask, will you let another entire year just slip by, or will you finally take your first step into the market today? You've got the roadmap now. You know to start simple, stay consistent, and protect your downside. The only thing left to do is take that jump. Get in there, learn as you go, and start building your future.